Teddy Keckstedt with Forex Trading Unlocked, and we are here today on December 27th, 2019, with a British pound US dollar 3 inside up buy signal pattern that has been triggered as of yesterday, and we will see how it is manifesting and see where it has the potential to go to. So before we get into that, real quick, we want to just show you our disclaimer to remind you that this video is for educational purposes only. And now we are going to get to our live action screen. So here we are at the www.forex-trading-unlocked.com website. And at the top of the menu bar, you can see workstation, and we've already pulled up this page. We're going to drop past the economic calendar. We don't need to look at that. We're going to just get into the heart of the matter right here. So here we have the British pound US dollar, okay? And we have this little area that is circled in right here. So as you can see, the market had made this higher move high up here and slid down till a few sessions back and stamped this higher move low. Now overall, this market is trending higher. It has been a bull and definitely has had some nice action over the month of December. Lots of volatility, from down trading at $1.29 something all the way up to $1.34 up here, or $1.35. Was it $1.35? 14 was the high, and then back down here to this low that was of $1.29.04. Now it is $1.29.04. It says $1.2910 here for our level here, so we need to adjust that real quick. And let's get our settings here. Okay, well, we know it's $1.29.04. So anyhow, this low had, oh, here we go, coordinates. Okay, so $1.29.04. All right, cool. So now that number is correct. All right, so with that being said, our low was set there 3 sessions back, and it was followed by a slightly positive day 2 sessions ago. Now that right there is what you call a harami bias pattern. It's a 2-day pattern. It's not the most reliable, especially now it was going with the trend. The overall trend is up, so looking for a buy. Yeah, it's kind of nice, but I usually stay away from that one. If you're an aggressive bull, you would have been getting long after the close of that day, and you would have seen a nice little lead on it already yesterday. Now, yesterday was the day. That was the confirmation. If you listened to our videos yesterday for our analysis for the 26th, you would have heard us telling you that we were waiting for a positive close in the British pound US dollar, which we did get, and that was our buy signal. So for any of you our listeners that got long yesterday after the close, or sometime early this morning, or yesterday afternoon when they started the new trading day for the pound US dollar for the rollover time, then you have definitely done yourself, you've gotten yourself a nice little holiday bonus trade going into the weekend. So now your low of $1.29.04, that is your downside risk. This is where you have your stops in, or should. And now that the market is, if you've already gotten into it, I would start to raise it and bring it up towards a break-even stop or just below there, just because you don't want to let a winner turn into a loser, or definitely a big loser, since you have a nice lead. So that being said, the market's now trading at $1.3084, and our target is $1.3198 up to $1.3286. So there's some room here. Now, it doesn't look like it's that big of a jump for the pound to go up to that level, but now when you hear those numbers, you can be like, oh, wait, now you got to remember the British pound US dollar and the British pound versus many other currencies is not like the Euro US dollar or other currencies that have much tighter ranges. The ranges here for the pound are always a little bit more extreme than they are in other currencies, so that's why I'm not skittish of the pound. I'm always very secure before I place a trade on which direction and what my risk levels are, because the pound can swing. But the nice thing is, if you catch a move in the pound, you're on a ride and you're going to make some money. So right now we have the buy signal. You can see that it is definitely confirmed with a nice little pop today. So like I said, for those of you that are already in the trade, definitely raise your risk, especially because it's holiday markets. I would be cautious of any big snapbacks and stuff that could occur. And as far as if you're not in the trade, well, then I'd be looking more if you're in options, like a binary option or a futures options trader, because you have the weekend. We're on a Friday, it's already mid-morning, we only have a few hours left of trading, no one's really paying attention. It's thin as far as the bodies involved in the trading industry, and Monday and Tuesday are going to be light because we're in front of the New Year holiday. So really until next Thursday, we're probably not going to start to see any real true volume and decent liquidity come back into the currency market. So use caution. Like I said, if you're already in this trade, then you're on a good lead, but still it's not a bad spot because our risk here is $1.2904. You're at $1.3085. See, that's a big risk right now to jump in on either a futures contract or the which is close to this pricing, or in the Forex derivative like this. So yeah, if you're not in the trade already, like we already announced yesterday and had it set up, then I would say if you're a bull, you're aggressive bull, you got a shot. But I would just use caution and definitely use this $1.2904 as your risk. But there still is some nice upside potential because we still have another whole buck we're looking for. The first is $1.3198. And if we pressure at $1.3286, you are still looking at a nice little, risk reward ratio here. So, for those of you that are in, we're looking for this trade to manifest itself over the next few sessions into the first of the year. Now, could it go higher and continue all the way up and take out this higher move high? Very easily could. But remember, this market is a bull, but it's also it's a slow riding bull. This upward sloping blue line here is a good slope, and that takes a while, which means that it is a neutral to higher posture market. It's not just looking for explosive rallies. Now, it has had a nice breakout to the upside in this current little move up here where it made this higher move high, or where it initially started to show that this market was a bull. But see how it plateaued here for a month and a half, almost 2 months? We could just as easily settle into that kind of trade as we head into January and the new year with this market, because we don't know what's going on with the UK. Now, I would say that this break that we've had recently, this correction, is kind of just a digestive move off of this rally that we've had over, that occurred at the beginning of the month. Markets go in one way and they come out typically the same way. So now that we've digested that move, I think we're basing and getting ready for a neutral to higher trade, where once we get into this target range here, it wouldn't surprise me that we start to base and kind of hover for a month into January before we make a challenge of the high up here. So your breakout level for a new extension leg higher is definitely this high up here. Are we targeting it? Yes, if we can hold a neutral trade in this resistance band here, that will become support, and then I think we could have a challenge of this $1.3509 area. So the main thing right now, though, is to see how this trade signal right here, this is a 3 inside up buy pattern that we're using, this keying off this low. That's the first day. The second day is a slightly positive day, and the third day is also a positive day, which then gives us the signal to jump in using the low of that move as our risk level, and then you get long. So now that would be either in the futures, the Forex markets, the binary options markets, or the futures options markets. Or if you play ETFs, there are certain currency ETFs that you could probably use this for, but I would use the dollar index, not a direct currency like this, only because the pound is one of the biggest weighted currencies. Would I say you could probably use this as a gauge on how to trade some of those ETFs. So if you'd like to learn more about the high probable Japanese candlestick pattern, the 3 inside up, you can learn about it by reading the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle version. And if you want to know the next time we have a buy signal or a sell signal like this that comes out, just subscribe to our YouTube channel that you're watching right now. And that way you can see, you'll be notified right away when these things happen. So yesterday you would have already known about the buy signal, and you probably would have already gotten in the trade yesterday afternoon, like the rest of us. So you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets, and the Forex markets, the futures markets, the options markets. There's all kinds of ways to capitalize on this. So thank you very much for your time. And like I said, if you want to learn more about these patterns, subscribe to our YouTube channel or follow us anytime you want at www.forex-trading-unlocked.com. Thank you very much.